GMGM. I'm Shantelle.
And I'm Jessie.
And this is Glowing in Tech.
So we're really excited to have the Abi Mohammed join us today. She leads community at Diversity VC, which is a not-for-profit dedicated to establishing the global benchmark for diversity, equity and inclusion in the venture capital industry. Through its mission to build more inclusive economies, Diversity VC drives change via 4 key initiatives: the Diversity VC Standard, which offers DEI maturity assessments, the Future VC Internship Programme, aimed at diversifying the talent pipeline into venture capital, and a vibrant community learning network for diverse VC professionals, as well as the publication of industry reports and resources. So Abi has an incredible career journey. She served as the head of marketing and business at Extend Ventures and was the early scaling expert at TechNation, which is actually when I first met you. So she supported high-tech startups in accelerating their development. She's also angel invested in 4 companies through the Community Growth Ventures and began her career as a software engineer. So many questions I want to ask you. Do you want to tell us a little bit about how you made all those changes? How did you even get into the world of VC?
Mm-hmm. It's so lovely to be here, by the way. Thank you, girls, for inviting me. And yeah, like, honestly, my journey has been crazy because I think the question is around, like, how I got into the space, right? Or
yeah, like, you came in as a software engineer.
Yeah.
And then you've moved your way into VC. Like, what was that like? For me, when I started in tech, I didn't know anything about venture capital.
Yeah,
it was not on my radar.
Like
Yeah.
Even when you hear the words, you're just like, what are you talking about? Like,
yeah.
how do you make sense of it?
Yeah.
Exactly. So, like, there's 2 stories I tell people, right? So the kind of normal story that I don't want to, like, freak people out, how I got into venture was, like, I started going to network events and stuff. But the truth is, I didn't know anything about venture. I didn't even know entrepreneurship was a thing when I was growing up. It was only one night when I went out and then a guy that I kind of fancied mentioned about, like, going to an event, and I was, like, so curious, and I was like, okay, I want to spend time with this guy and just get to know him. So I woke up at 7 a.m. in the morning. No, actually, I got to the event at 7 a.m. in the morning. It was at Google for Startups, and that was my first kind of, like, I know you're looking at me like
dedication.
Dedication.
Oh, with the commute.
Don't talk to us about
it. No, honestly. But honestly, like, if you ask me who he is and what's his name, I can't remember. It was such a long time ago. And yeah, went to the event and literally my eyes opened. I went to the event and it was all about, like, tech community, bringing people color. So at the time I was a software engineer and I was working in Cambridge. So I used to come down to London often because I felt so lonely in Cambridge and I had no sense of community. So once I came and I went to the event, I realized, oh my God, there's a space where if I wanted to actually work in London and be remote and still do the stuff that I need to do in Cambridge, I can just go to that space. Slowly, like, I got to know the people, networked, build authentic relationships, and I met my partners for Community Growth Ventures, where we kind of formed together to become, like, an angel group and started investing in, like, founders and stuff.
Like a syndicate.
Yeah.
Big word, you know.
Wow.
Venture.
Big word, yeah.
I know.
I didn't know any of these words, by the way. So, like, I didn't know I was an angel investor. I didn't know what I was doing. Most of the stuff was very, like, chaotic. Like, I feel like if you want to be an angel investor today, you have, like, Andy Ames Angel School. This is, like, back in 2016, 2017, there was none of that. So it was like, oh, there's a thing and you can do a thing. So yeah, it was weird.
And I also feel like even when you know a little bit about, like, angel investing, like, I spent some time around, like, VCs and things like that. But, like, I have no idea what the rules are for the UK. I feel like the US rules that you have to be accredited and all this stuff. Do you have to do that in the UK?
So it's changing. So, like, you have to be self-certified to angel invest.
Right.
So there's a couple of things. So there was, like, a reform that happened in the beginning of the year, which got overturned. I'm not sure if it's, like, overturned properly, where you have to be now certified and you have to be earning a certain amount of number to be investing or have credibility, meaning, like, you've done it before or gone through, like, a school. But before then, you can do, like, some, like, small angel investing, like, by maybe Crowdcube or was it Cedars or something?
Cedars, yeah.
And then you was able to do it. But then with us, we kind of, like, went to the route where we formed ourselves as an LLP. So we got, you know, lawyers involved and stuff like that, and then self-certified ourselves like that to be able to angel invest. But yeah, it was complicated. Like, honestly, the legal terminologies still confuses me sometimes, so I have to always double check. But yeah, there's so many like other ways of doing it now. Like, you can go through a school, or you can go, there's so many resources online to figure out like if you want to do angel investing, which like, again, I'm not certified to like give actual advice, but I think is a great opportunity to diversify your wealth if you're thinking about the long term of investing.
And let's take it a step back, actually, because I'm sure that like a lot of our audience are new to tech and like definitely new to VC. So could we break down like what is angel investing and then what is venture capital?
Angel investing is when you use your own wealth, your own money to invest in a founder. And usually, typically, a VC is an institutional fund where they get money from a LP and they use their money to invest in multiple companies. So now they're kind of like attached to make sure they get the return to give back to their other investors, if that makes sense.
It's honestly really tough. And
Yeah.
so I remember when I like first like got into kind of like the startup world and I was like trying to figure it out. And then someone told me to read Venture Deals, the book. It's meant to be like the best book to kind of get you in there. But I was like, what are they talking about? Like,
Oh, I haven't heard of that.
they do break everything down. It's a really good book, but I haven't finished it. That was 2 years ago.
Yeah. Those books are really complicated because the thing is you have to read it and then reread it and then digest it.
Yes.
And the best thing you can do as well is by putting in a practice. So like, for example, at Diversity VC, we have Future VC where we have a person that wants to break into VC, we get them to go through some learning courses. So it's small bite-sized kind of like information before, you know, getting the internship. So it's like a combine of like, you know, content, insight, and actual real experience to get you to the point. I feel like most people don't understand, like, it's with anything, like in school, like when you learn science and biology, it doesn't make sense until you physically do it. So that's the same thing with venture.
Yeah, I agree. I think, especially for me, like I understood it more once I did Entrepreneur First. I understood. I was like, okay, this is how like it works. Like that makes sense.
Yeah.
When I was reading the book, I like would read the same page 5 times and be like, I get it, but like
it could be something. Yeah. No, 100%. Even like same with me. Like, so when I did my first investment, like little things like I didn't understand that it's not just about giving the money to the founder. There's so many hidden costs, which freaked me out. And it was too late. It's like one of those things where you have to just ride through it. And it was painful, but like I got through it. So you have to do like end to end, like where you kind of like source the deal. So I remember we saw like loads of founders. From the 4 deals, it came from a pipeline, maybe over 300 founders.
Wow.
From the 300 founders, we probably went through due diligence with maybe like 30. And then some of them we were like, we're not sure, we don't have the risk, because again, we want to create wealth, we're not doing a charity case, right?
Yeah.
So it's like, okay, who is actually going to be worth our money? And then in 7 years, because again, when you give someone money, it's not like an instant return. You're looking at maybe 5 to 7 years, and on top of that, because you're kind of like coming in as a fast check, you get diluted every round, meaning basically if that founder got money from somewhere else, unless you give another percentage of your money, your percentage stake in the business goes down. So yeah, it's like you have to also think about like, okay, as an angel investor, how far do I want to go through with a business, and when do I want to exit as well? So you can look at maybe secondary market shares and stuff like that. But yeah, again, the best thing you can do is just do it. With my 4 companies that I've done with my partners, they're doing well. Okay. So I don't know the end goal yet. So once I get there, I might come back and tell you about
that's
it.
so cool.
We need you back to be like, this is how it turned out.
I might be crying and one more laugh. I have no idea yet.
And just to clarify, when you're angel investing, are you finding a group of people to pull your money together? Or is it like you're putting your money in and you don't necessarily know who else is in this angel investment round?
So with community growth partners, we were at the beginning 3 of us, and then we became 4. So it was like we 4 were united to put some money together. So if a ticket was 10K, we all contributed to the 10K, and then it might be an extra cost for like, you know, legals and stuff like that, which we covered. But then we come into a stake. I think in one of the deals, I think in the earlier one, we found like co-investors to come with alongside us.
Wow.
But then they would be a separate name on the cap table. When you want to have it all together, which I feel like one of our deals we did, because that founder ended up getting venture capital as well, meaning that our stake had to be a minimum of 100k, which was crazy. I'm like, how the hell am I meant to get 100k?
Wow.
So that way we basically formed a syndicate, so we had loads of people coming in together, and then we just be one name on the cap table for the founder.
Okay.
Is there like a difference between like an angel check size and like a VC check size? And also, could you explain cap table for our audience?
So simple terms of what cap table is, it's just names on like who's invested. The cap table is just a term. And then with angels, you can like, it depends on like how much you want to invest. You can invest as little as £1,000 and go into a syndicate, or you can go all the way to like 50 or 100k. Generally with VC money, VCs, they come in with a bigger check size because they want to have a bigger percentage, otherwise it's not worth their time. So they will generally come in, if they were not leading, it could be like from like 250k to up to £1 million. If they're leading, they can do bigger tickets, but it depends on what stage that VC is. So you have different stages where you're looking at the different kind of type of money. So you have like early stage VCs, they generally come in smaller ticket size. Then you have like VCs that are a little bit bigger, they might come in like 10 to like 50. And then past that point, you can have like, you know, private equity, you can have venture debt. There's so many different routes. So when people talk about like, oh, what type of finance should I take? There's so many different routes. I always advise people, especially if you're thinking about going through a venture scale, and this is my experience from Tech Nation, because I saw loads of founders come from pre-seed all the way to IPO, is get yourself a really good lawyer and get yourself a really good accountant to actually map that out for you as well. 100% worth the investment.
It feels like you've got to do so much prediction early before you even know, because this is often like you're angel investing before there's a product market fit, right? Before you know that there's, or I guess you're doing your best to figure out if something is viable. What is that process like?
So even with that, like it comes with a sense of like privilege. I think it's always good to have a product that is viable in sense of like you've double checked if this is worth actually building. So when I look at businesses, I always think about these three aspects, right? Do you have the team to actually execute? Do you have a clear vision to know exactly what your end goal is, like where you're starting, going? And then the last thing as well is revenue. Are you actually making money? If you're not making the money, it's actually a hobby, it's not a business. So you need to really rethink about it. So when you're building stuff, especially like if it's not like deep tech or like something in health that takes a long R&D, and then maybe something simple as like a SaaS business, you need to think about like, how can I prove this model that there is customers, I am making money, before, you know, you overlay the tech infrastructure, because that's the expensive bit, right?
Yeah.
That's the reason why you want to probably get finance, or maybe you want to get the talent in to build the next version, right? How can you do that as low cost possible and then get venture money? Or maybe you don't want to get venture money. There's so many businesses that don't get venture money and they bootstrap. You just need to think about like, how do I build my business to be revenue stable instead? So yeah, there's so many different options.
I've seen that argument more and more about bootstrapping because I guess for some people they don't like the hyper growth and they want to stay like, I guess, sustainably growing. Whereas the idea with VC is it's like a cash injection that means you can accelerate things, right? And then from what I understand with VCs, are they more involved in your business than, say, a group of angels?
Generally, yes, because normally when a VC comes in, they take a higher percentage, so they might also take a board.
Yeah.
So it depends on what type of board seat they might. So if they are leading, they're more likely going to get a board seat that has an option of voting. And that's when it gets dangerous, right? Because now you're kind of like answering to someone else. So if your vision hasn't been cleared or you haven't developed in a place where you're not ready to like hypergrowth, these VCs will force you to hypergrowth, because again, they are in themselves like in a timeline to return their funds. So they're going to push that force on you. So I would say always think about like, before you accept money, have you actually thought about the process? Are you ready to do whatever you wanted to do now before going into a point where you kind of like are in autopilot in a sense for the next 10 years. And it depends on like what your exit strategy is. Is it going through like an M&A, or are you going to for like to kind of like build the IPO kind of side? Not a lot of businesses do that because again, it's such a small percentage. But again, it depends on what your business is. So yeah.
Oh,
So I feel like I've learned so much. I didn't, and you mentioned
thank you.
like,
Yeah.
no, it's so good because like I always stop at VC. I didn't even think about like private equity or like venture debt or anything.
Don't
like
ask
that.
me anything about private
Late
equity because it's
stage.
still like
Yeah.
it's a bit like to me. So I work more on the early side.
I love the early side though. I think it's fun. I mean, well, I not as a VC, but like everyone's so excited about what they're building, and you're just like, okay, you know,
Yeah.
keep going.
Are you in VC as well then?
No,
Because you mentioned entrepreneur first.
yes. So I was a founder on one of their accelerator programs. I'm in the blockchain space, and I did their first blockchain cohort. It was so interesting because I think when you are in the blockchain space, everyone's kind of a founder. Even if you have a job, like everyone's doing like 5 different things and they have like so many things going on. But that was my first more formal insight into how it works on the founder side of things. But you learn about how it works on the VC side of things because they're always talking about how every company that they invest in, they basically want it to be a unicorn. And they have some, but it's like high pressure. It's a lot more high pressure. And it also changed my mind about VC, you know, because like I have like so many like startup ideas that I just kind of like write in my notes app. And I'm like, if I would build this, I don't think I would want to raise immediately.
Yeah.
I think I would want to like grow it. And then when I want to scale, I would go out and like raise. It would be sound. I think if I go like a step back with Entrepreneur First, you come in without an idea and without a co-founder. Then you kind of form it within 3 months, and then you like go to the investment committee and you raise a little bit of money. But yeah, like I would raise if I had like, you know, solid company going.
Exactly.
That's what I sit now. But it works different for everyone. Like you said, like some people will want to go and raise from the jump, and some people will want to like basically like dog food their startup and not raise and like keep as much of it as they can. But you just have to be smart with marketing. That's what I would
Exactly.
say.
Yeah. No, looking at it like from all the experience, because I've been in the space for like nearly coming up to 7 years or 8 years, I would literally think about if you're going to be a first-time founder, build something that is going to get acquired so you can make wealth. So you can be, if you're super technical, can you build something where a bigger company can buy it and then let that business go? And then your second business, you can use that, you know, the wealth to build something that's more sustainable.
And you have the credibility to like
Yeah.
raise more money.
Yeah.
Look at like the WeWork guy.
Oh,
He just keeps raising money.
Oh, that's a different... yeah.
No, like, that was a bit tongue in cheek. But like, I think that like when you're a second time founder, like you already kind of have the trust of VCs, and like you can raise money a little bit easier depending on the climate.
You have the badge of honor, basically.
Exactly.
Yeah.
Like, you've done it. You've been here, done that.
There's so much context to the industry and how it all works that as a first time founder, I'd be terrified. But then I guess that's kind of the point in joining these communities, right? Like you get access to the people that have been through it before as well. I want to go back to your journey, and something that we've spoken about before is your transition from being a software engineer to going into VC. What made you, as a software engineer, what made you stop wanting to do that?
Yeah, no, that's such a, like, that was like a turning point of my life, right? Because I thought I was going to be in tech coding for the rest of my life. So I've coded since I was 13. And I remember being in college, I didn't even like tech for one of my A-levels. And like, yeah, I don't know what happened. Like I stopped because again, you don't see that many, you know, of people that look like us in tech. So I did something completely different. And then I came back and did my master's and I became a software engineer. And that experience itself was very difficult to, even with a qualification, it was hard to penetrate. And then being in a space as well was even harder. But then for me, because I come from a background, so I'm Somali, and we're very tough skin, it's like you have to just like, you know, ignore it and just, you know, march through it. So like, even though I used to get like sexist comments, racially slurs, there were so many incidents. One thing that made me stop and not go back was on my last project, I was building something, and probably you both will understand when you're building something that's on paper and translating it to digital, that user experience is going to be completely different. So the people that was deciding how that's going to look like weren't diverse. They came from a place of privilege. Most of them probably was like from private schools, have access to internet, understand like the legal terminology. And as a coder, while I was building it, I was like, I can see a problem, because now I can imagine someone doesn't understand tech or understand how to access, you know, the software that we're trying to do, and we're more comfortable on paper, you're going to now penalize them. And I saw there was like an ethical kind of dilemma, which I brought up in front of like the boards and the exec. And I just basically got told, like, you're not paid to think, you're paid to code. Yeah.
I'm so sorry.
It's okay.
It's horrible, and it happens way too much, like way too often.
That's awful.
Oh, I'm so sorry.
No, it's okay.
Yeah.
Don't worry. Honestly, it broke my heart, and I was like, I can't stay in this environment. And then at the same time, I was like discovering startup world, and I realized the importance of like how most of these founders, if they do scale and become the next unicorn, they do shape, you know, the behavior and society as a whole, especially with the technology that they're building. It's kind of embedded, and once you embed it, it's hard to dismantle. So in my head, I was like, oh, I have a great opportunity where like I'm working with this early stage founder. Can I kind of like open their mind and like, you know, teach them, or even like, you know, get them to a place where they consider edge cases, or maybe consider diversity of thought when they're building the team, which is really important.
Yeah, and that's what I think is so beautiful about your journey, is like you had this horrible experience, you had these moral dilemmas, and rather than like give up and leave tech entirely, you were like, I'm going to be part of the solution to this and build spaces where there is this diverse thought. So it was after that you built the Libra program, right? Yeah.
So again, it was not like an overnight journey where like I knew I left tech, and at the time, sorry, my throat is closing up. It's been a wild week. So I left tech, I quit, and my parents was like, you have to do something, and I think that's when I joined Tech Nation, because I was like, let me do something that is in the space that I'm kind of interested in. Didn't know what role I wanted to do, so I wanted to just do something quiet so I can just learn and listen. And I think I was there for about a year and a half, and then the pandemic happened, and 2020 happened, and the George Floyd murder happened. And it was the most awkward decision where like there was only a few of us that were Black at Tech Nation at the time, and everyone just turned at us and like, what should we do? And we're like, And then it was not just me that kind of like the seed of the idea. It was a group of us was like, okay, let's actually think about the bigger picture and think about like, where can we have the best influence? And the influence is through our programs. We support the best of the best. So at the time, I think the UK had about 100 unicorns. A third of them have gone through Tech Nation. So it's a proven track record. We have a better rate than YC in sense of like the amount of companies that used to survive and last longer and actually be acquired and like, you know, going through the whole journey. But if you look through the pipeline, there was just the same kind of founder, the same kind of story. There was no diversity of thought. And I was like, this is a great opportunity where we're like, okay, let's really figure out like, why aren't diverse founders applying for Tech Nation? Like, what's the top funnel problem? And I went away and I did a whole discovery, and I realized like the criteria was hard. Majority of like underrepresented founders are solving problems that don't really fit in our kind of criteria, because at the time we was doing cyber program, fintech, AI, and generally underrepresented founders are solving problems that are kind of like in a mixed bag kind of sectors. So it's like, can we create a program where it's like sector agnostic, so any sector? And then can we actually pilot it in the sense of like, can we get a group of founders? And the problem is like they have no or little access to capital, no little access to network, and no access to commercial opportunities. Can we solve that? So I was able to create the program, did a call out, allowed anyone to apply, had amazing turnout. I think over 100 people applied, because I was like, let me actually make sure that these are the kind of criteria that I'm looking for. You want to be venture scalable, you want to go through this journey. So it kind of like pulled the numbers down a little bit. And I was really happy because once we did the program, majority of the founders actually raised venture capital.
Wow.
Yeah. And the majority of them actually expanded internationally through the program.
Oh, wait. Okay, that's amazing.
So what Technation did, which I learned, is like a badge of honor, like a verification. So as soon as the founder was announced to be on the program, their branding platform like risen, and then they became more visible, which attracted them investors and opportunities
Because of the prestige associated with the brand. That's
Yeah,
so
yeah.
cool. It's amazing.
I feel like I want to start a company.
Yeah.
I'm like, ooh.
This is who you need to speak to.
Yeah. The program still goes. So like, how Technation kind of like lost the government funding and then it got bought by Founder Forum.
Yeah.
So one thing that I'm really proud of, especially with that program, it actually continues. So it still exists today on the Founder Forum.
Okay, amazing. I have to check it out. I always say this because I'm like, I want to do this and I want to do that, but it's true. Like every time we have a guest, I'm always like so inspired, and I'm like, why not?
Yeah.
Yeah. Honestly, it takes a small step. Like the worst thing that can happen, you fail.
Yeah, exactly. And then you just pick up again
you
and do
pick up,
something
you
else.
stand up.
Yeah.
Yeah.
Amazing. Okay, I think that's where we're going to wrap up for this episode. Stay tuned for next week where we will be speaking to Abi again. Thank you so much, Abi. Let us know where we can find you. How do we keep in contact with you?
So the easiest place is probably LinkedIn. So it's Abi Mohammed. And I'm also on Instagram, which is Team Abi. So ABI on that.
Amazing. And we'll put it in the show notes so that you guys can absolutely follow and connect and maybe ask your questions about venture capital and angel investing. But it has honestly been a pleasure.
Thank you for having
I've
me,
learned so much.
honestly.
Thanks so much.
Thank
Thank
you.
you.